Welcome to InsuGuru channel for GIPSA PE 2025 Reinsurance Questions and Answers dated 14/12/2024. Which commission rate is applicable for an excess of loss treaty? Answer: Sliding scale commission. 2. In a surplus treaty reinsurance arrangement where the policy sum insured is 100 Sr, the retention is 20 Sr, and the claim amount is 30 Sr, what is the amount that the reinsurer should pay? Correct answer: A. 24 Sr. Q3. What is retrocession? Answer: Reinsurance of reinsurance is called retrocession. Q4. Reinsurance is a contract between. Answer: Reinsured and reinsurer. Q5. What is FAIR? Answer: Federation of Afro-Asian Insurers and Reinsurers, FAIR. Q6. What is LMA? Answer: the Lloyd's Market Association. Q7. What is FRB? Answer: Foreign Reinsurance Branch. Q8. What is ART? Answer: Alternative Risk Transfer. Q9. An insurer has a maximum 1 lakh surplus retention limit and opts for a surplus treaty of 10 lines. For a 10 lakh SI policy, he decides to retain 50,000. What is the amount ceded to the reinsurer? Answer: 5 rupees lakhs. Q10. What is ceding commission? Answer: a ceding commission is a fee paid by a reinsurance company to a ceding company to reimburse the ceding company for expenses incurred in the reinsurance process. Q11. 500 crore rupees is retained out of a sum insured of 2000 crore. How much will be the recovery from the reinsurer in case of a loss of 1000 crore? Answer: 750 crore rupees. Q12. What is a captive? Answer: a captive in reinsurance is a licensed insurance or reinsurance company that is owned and controlled by a parent company to insure its risks. Q13. What is a market pool? Answer: a market pool in reinsurance is a program that redistributes risk among a group of insurers and reinsurers, allowing them to underwrite specific types of risks. Q14. Whom do reinsurance companies pay brokerage to? Answer: reinsurance brokers. Q15. Who is the lead reinsurer? Answer: a lead reinsurer is the first reinsurer to sign a reinsurance contract and is responsible for negotiating the terms, conditions, and premium rates. Please like, share, and subscribe. Q16. What is PPW in reinsurance? Answer: PPW stands for Premium Paying Warranty in reinsurance. It is a clause that specifies the number of days a premium must be paid to the reinsurer after the policy's inception date. For example, a PPW of 90 days means that the premium is due within 90 days of the policy's inception date. Q17. What is a facultative obligatory treaty? Answer: a facultative obligatory treaty is a reinsurance agreement that combines the facultative and treaty approaches to reinsurance. Q18. 1000 Sr is 100 crores contract loss of 400 crores. What is the liability of the reinsurer? Scale I to 2. Answer: 300 rupees crore. Q19. 4% obligatory cession. What is the name of the treaty? Scale I to 2. Answer: quota share. Q20. Who maintains the nuclear pool? Answer: GICRI. Q21. Who manages the terrorism pool in India? Answer: GICRI. Q22. Pick the odd one out for types of reinsurance: per risk, per event, stop loss, surplus. Answer: surplus treaty. Q23. The premium paid by the reinsured is called. Answer: reinsurance premium. Q24. What is GOP? Answer: gross net written premium income. Q25. What is the minimum obligatory cession to GIC? Answer: 4%. Q26. Layer line in which reinsurance? Answer: excess of loss reinsurance. Q27. What is a downgrade clause? Scale 3 to 4. Answer: a contractual provision that allows the insured to terminate their policy if the reinsurer's rating is downgraded below a pre-agreed level. Q28. What is the sudden death clause? Answer: A provision in a reinsurance contract that allows one or both parties to terminate the contract early under certain conditions, such as insolvency, loss of paid-up capital, war between countries, or failure to meet the treaty's terms and conditions. Q29. For a flood claim, the insurer will recover from. Answer: catastrophic excess of loss, CAT-XL. Q30. In which reinsurance is an earthquake claim covered? Answer: catastrophic excess of loss, CAT-XL. Q31. Which arrangement has features of both treaty and facultative reinsurance? Options were open cover, fac obligatory, etc. Answer: facultative obligatory treaty. Q32. Who has mandated to reinsurers in India with a minimum credit rating of BBB? Answer: IRDAI. Some other incomplete questions. PML doesn't have a bearing on retention. Choose the wrong one. If 10% Q's treaty, retention is 10 SAR, surplus is 4 lines. What is the automatic capacity to underwrite risk? A question related to the rate on line was asked in practicals, scale 3 to 4. Thank you for watching. Please like, share and subscribe.